What's up, everyone? It's Karthik with MoneyWest. So China is absolutely struggling right now because there is a significant issue related to the banking sector that's taking place over in China. And that's what we're going to discuss in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like and subscribe to the channel as well. So let's start with the major problem that's actually happening. Recently, up until the week of June 24th, there's been close to 40 banks that have disappeared in China, that have literally just gone out, just vanished from China. And the banking sector is facing a severe crisis. And in just 1 week, 40 banks have essentially disappeared. The collapse of the Jiangxi Bank has further deepened the sector's problem, and as smaller and medium-sized banks collapse or are absorbed into larger ones, the risk of a systemic failures continue to grow. Now, this is going to have some global impact not only in the China economy, but also in Southeast Asia and also in the entire world because of how big this entire problem is. And I spent a lot of hours kind of studying and researching about the entire problem. I have done videos on what's been going on over in the real estate market over in China, which we'll discuss in just a minute. And that's really just been the root cause of most of these problems here. And the experts are warning that the situation could have a severe consequence for the global economy as well. Now, this is called a savings and loan crisis, or in other words, S&L crisis. And a similar crisis essentially happened in the US as well for banks for many, many years. And starting in the mid-1980s, also happened in 1970s, this was a mix of three things: aggressive lending, poor risk controls, and also a real estate downturn. So when you combine these three things, it causes a lot of pain and suffering and trouble, not only for the banks and the developers, but at the end of the day, for hard-earning consumers and people like you and I. So this is a big problem for rational, everyday working people and also for investors. Now, contributed to the collapse or consolidation of over 1,000 small lending institutions happened back in the 1980s in the US. And currently, and this is just to give you a bit of a scope of the entire problem, currently in China, there's over 3,800 banking institutions that are currently threatened with this problem in China, and their assets are worth over $7.5 trillion. So 3,800 small medium banks are threatened in China with this problem, which their combined assets are 7.5 trillion US dollars, and that is 13% of the total banking system. So we're talking double digits, 13% of the entire banking system over in China. Banks in the thousands, 3,800, that are threatened with over $7.5 trillion worth of US dollars here. And most of that threat comes from improper management and high volume of bad loans in the real estate sector, which I'll talk about in just a minute. Now, in the week ending on June 24th, 2024, 40 Chinese banks vanished as they were absorbed into bigger ones. And today, Jiangxi Bank of China went under, further escalating the crisis as well. So essentially what happened was, as consumers, as everyday working people, went to small and medium banks to deposit their cash, as any rational person would do, what these banks did, essentially take that money and they lent it, or essentially offered loans to construction companies, developers, and essentially funded a lot of these construction projects to these unreliable developers who took loans to build these various projects. Remember, there was a lot of footage and a lot of coverage over demolitions and again, big apartment buildings coming down, a lot of projects going unfulfilled. We kind of have something very similar over here in India, but it's not to the extent where there's a lot of buildings getting demolished. India, I would say, is a lot more stable and secure in that sense, as opposed to China, which the footage was definitely very devastating and heartbreaking to some extent because of the real estate crisis. And that's been happening for about a few years now. I believe it started right after the pandemic, and there's been a lot of incomplete projects. There's been a lot of demolitions and a lot of unfulfilled and unhappy investors and residents who essentially paid for the apartment or paid for the construction of that apartment, and it never got fulfilled, it never got completed. And so if the project is not completed and if the remainder of the payment hasn't come in, the banks are holding on to a lot of these toxic and these bad loans. And if they start coming under a lot of pressure with these depositors, if there's a bank run and they can't pay everyone in their deposit, whatever it is, then of course there's going to be a bank run and they risk going under. And that's exactly what's happening at the moment. And so many banks have lent to real estate developers and local governments, gaining exposure to China's real estate crisis. And some have revealed that 40% of their books are made up of non-performing loans, which again is a very troubling number because almost half of their books, of their assets, are in their non-performing loans, bad loans, so to speak, or toxic loans. And China's main way of dealing with small, feeble banks is making them disappear, which is even more evil than I ever expected. And of the 40 institutions that vanished recently, 36 were in the Liaoning province and absorbed into a newer lender called the Liaoning Rural Commercial Bank, which was created as a receptacle for bad banks. And since it was set up in September, 5 other institutions have been established to do something similar or similar type of work, with more expected as well. So the root cause of all problems, as we already know, is that China's real estate sector is in a deep recession. Overextended real estate developers and local governments have defaulted on loans, creating a cascade of financial instability. Property prices have plummeted, and also construction projects have stalled, further straining the entire financial system. And the collapse in consumer confidence, driven by job insecurity and defaulted project deliveries, has left a surplus, and this is actually quite crazy. It's left a surplus of unsold properties valued up to as much as $4 trillion. That's how much the surplus is over in China with respect to the properties that are available in surplus, meaning there's more supply than there is demand. And these are all unsold properties. And I'm sure if you take market value, if you take account for those $4 trillion properties, that market value is going to be significantly lower, considering that the demand has really faltered because of these crises, because of the problems that China is facing, and the demand is not really there because of the lack of proper infrastructure and also lack of a very systematic process on how this would be done. Now, adding to the complexity, if this wasn't enough, banks have now applied their brains to essentially create asset management companies, or AMCs, to offload these toxic loans over to investors. So if this wasn't evil enough, what they've done is they're creating a facade of stability. What they're doing is they're taking all these bad loans. Remember that episode from The Big Short where the guy is telling, I forgot his name. He was telling, it was at a dinner table. He's telling how he takes all these bad loans, packages them together, and then starts selling them at a higher yield, at lower risk, to all these investors who didn't really care. And that's really what's happening with a lot of these asset management companies, to offload these toxic loans, because they're essentially buying all these bad loans to avoid taking on credit risks. They're packaging them together, and of course, essentially giving it off to investors as higher yield. And the National Administration of Financial Regulation, so NAFR, is now starting to crack down on some of these practices. So this is a new banking regulator that's issuing fines and also increasing oversight as well. So again, it's just not a great situation. It's obviously going to be putting a lot of pressure over on the US and some other parts of the world, because China is the second largest economy in the world. And with its real estate and the banking sector facing some significant issues, I'm sure there's going to be a lot of need for injecting liquidity to kind of really boost that sector back up, because otherwise there's going to be some cascading effects over to other parts of the world as well. Now, major unrest in China, here are 4 or 5 different problems that are going to be coming up, in my opinion, and according to a lot of studies. First one is economic disruption. So loss of savings. So when banks fail, as we already know, depositors may lose their savings, leading to widespread financial insecurity. I've seen multiple reels, multiple TikToks where situations over in China is not good. There's huge lines. There's a lot of people outside the banks trying to collect their money, trying to withdraw their money because of the failures in banks, something that we witnessed back in the US last year as well. But it's kind of crazy to witness this over in China, and at a much larger scale, because we're talking 40 banks, not one, not two, we're talking 40 banks and more to come, as there's over 3,800 banks that are threatened at the moment. Business failures. So just as consumers are going to find it difficult to get access to their cash, businesses are also reliant on bank financing, may struggle to operate or expand, leading to increased bankruptcies and unemployment as well, and a credit crunch, because bank failures can cause a credit crunch where loans become scarce, further stifling economic growth and exasperating financial difficulties for individuals and businesses as well. The second big reason is it's potentially going to increase unemployment. Job losses, so bank failures often lead to job losses within the banking sector and related industries as well, contributing to a higher unemployment rate. Then we've also got an economic downturn. The resulting economic downturn from reduced consumer and business spending can lead to further job losses in other sectors as well. There's going to be some potential social unrest because there's going to be public protests that is already happening, and of course there's a lot of people frustrated, angry, and upset over to the entire situation that's happening. So loss of savings, increased unemployment, and economic uncertainty can lead to public protests and social unrest. People may take to the streets to demand government action and accountability, and loss of trust in institutions as well, because widespread bank failures can erode public trust very, very quickly, as we already witnessed from back in the Silicon Valley Bank failure from last year over in the US, and the government's ability to manage the economy, leading to increased social instability. There's also going to be political instability. So government credibility, the government may face criticism and loss of credibility for failing to prevent bank failures or adequately protecting the depositors, and policy changes will also be put in place. There's going to be a lot of pressure for changes in the overall policy and better risk control. Inequality and potential poverty, and of course criminal activity as well, because of the rise in crime. Economic hardships and unemployment can really force people to do things that are not morally or ethically or legally correct. But this is where we are, and obviously this is a very, very big issue over in China, which I don't feel there's a lot of coverage for that. But I was kind of going through a lot of different analysis, and I feel like there was definitely something that I can add value in terms of the overall issue, not only by presenting on what exactly is happening at the moment, but also explaining how there could be some impact over to the global economy as this continues to unfold. As we already witnessed, the real estate crisis continues to be a bigger and bigger issue, but now it's starting to play into the economy, the daily lives of the people with respect to the banks that are involved, and people not having access to their own funds, which is again the craziest thing there is, because the reason why consumers go to the banks in the first place is for safety and security. And I've long mentioned this before, that it would be a lot easier, it would be a lot more, it would be better for governments to essentially control the banks. In other words, for banks to become non-profit. And the reason I say this, and I hold this so true for banks to become non-profit, is because of the very fact that the moment they become for-profit, right? The moment the banks become for-profit, they start reaching out for profit. And the reason why that is so detrimental to the consumer's health and security and safety is because the profit does not come with any risk. It doesn't come without risk, right? So it comes with risk. It comes with some level of risk. And the more risk you take, the more potential profit you make. That's just finance and investing 101, because bankers, they need to be smart about taking risk. But when you are not smart about taking risk, things like this happens. Bad loans, poor quality of loans, high levels of risk, and causing a lot of pain and suffering and crisis to their own depositors that gave them the money to hold it for them safely and securely. But what did they do? They essentially lent it out to unreliable developers to build a lot of construction projects and whatnot, which they never fulfilled on. So this is where we are. Let me know your thoughts down in the comment section below, and make sure that you drop a like and subscribe to the channel. And as always, happy investing. I'll see you all in the next video.